Hey folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. This intraday analysis is for Tuesday, July 20th, 2010. Markets up today after gapping down in major fashion, folks. A big-time reversal today on the back of some news out of China, and that's what I think was the key catalyst today in regards to the markets able to reverse the earlier losses. We had a huge gap down today. The spiders gapping down underneath yesterday's lows, down to about 105.80 to 85, and again, that's on the SPY. Now we've reversed on the SPY to move up to 107.77 to 80. That's correct, folks. We have basically reversed $3 off the lows of the day today. And again, a monster reversal there from really around 105.80 to 108. I guess that's around the $2.20 level. Now, a couple other things to go over. What has been the cause today of the gap down? What was the cause of the reversal? We're going to discuss it all here in the intraday video. First off, you have to look at IBM and Texas Instruments. These stocks had some not so good revenue numbers last night after the markets closed. IBM, again, is still down on the day, but has come off those lows significantly. And again, you can see right there, still down about $4.35. Now, the earnings on these companies did beat, but the problem was the revenue numbers missed. And again, folks, we all know if you're a company and you cut costs by firing someone or laying someone off or cutting back on this or that, you can boost your general earnings, but you can't boost your revenues artificially. And that's the key there, the sales force. And what are the sales for the company? And that's really where we're seeing it in these earnings over the last multiple weeks now, as we got into earnings season last week and now this week. The revenue numbers are not cutting it. They're not meeting estimates, and that's why you're seeing some selling today on IBM. Texas Instruments, TXN, also down on the day, down about 90 cents. But look at the move off the lows of the day. Today, Texas Instruments gapping down towards the $24 level. It is now just underneath the $25 level off the highs, pulling back a little bit, down about 89 cents on the day. Now, this morning, Goldman Sachs came out with earnings as well. Now, this is key, folks, because Goldman Sachs gapped down on earnings. Again, their revenue numbers falling short. However, this is the key. Goldman Sachs reversed all the way, is now positive by $2.40. Look at that reversal today after a major gap down into the 200 moving average, and it soared basically from the gate all the way up, paused here, consolidated, beautiful in spirit of bullish consolidation, ripped higher again, and just off the highs of the day, up $2.31, just underneath $148 per share. Now, again, very good reversal there. We saw the financials reverse overall. If we punch up JP Morgan's chart, JPM, you can see this is basically flat on the day after a pretty big gap down as well. Stocks like ExxonMobil and Chevron and commodity stocks have really been the key leaders. Now, again, it's good to see the Goldman Sachs reverse and go positive. That's step one. But the other big news story overnight, which again, I think the markets didn't realize until they were open and you saw institutional buying going on here, was that China, or the rumor is, the speculation is that the Chinese government is going to loosen their hold on suppressing housing. Now, what China has been doing is keeping housing down by keeping some forces over it, utilizing some different aspects, and keeping the housing market from really growing like it wanted to. All right, it's almost like the interest rate effect that the Federal Reserve has. You know, when they want to slow growth, they raise interest rates. When they want to increase growth, they lower the interest rates. Same general aspect in China, and the thought process is, and the speculation is, that China's about to loosen that hold. Well, what does that mean overall? It means that if China loosens that, the housing market could come back, the building market could come back, and that means demand for commodities. Commodity stocks started to rip out of the gate. You saw stocks like ExxonMobil gapping down sizably, and look at the reversal on Exxon. Here's where Exxon opened today, folks. And then look at the run. It's beautiful sideways choppy consolidation and continuation move, and this is a major move off the lows. Exxon's low of the day was $57.67. It hit a high of $58.78. That's over $1 move up off those lows of the day. And for Exxon, that's a big move. I mean, that's a very, very sizable move. Take a look at Chevron. Same general thing. CVX. Chevron, same chart. Major gap down here. And look at the reversal all the way to these levels. I mean, just some monstrous gap downs and then major reversals. And you could even look at stocks like U.S. Steel. Take a look at U.S. Steel. This stock gapped lower and is now up $2.50 at the highs, or just off the highs of the day. AK Steel, and we're talking about all commodity stocks here. It makes sense. If you think about China, China's a major growth force here. All right, they're literally growing still the fastest of any country out there, essentially, and they probably will continue that way. So if they're going to loosen some of the grips on keeping the growth in check, you could see a major demand for commodities coming out, and these stocks, whether it's AK Steel, US Steel, ExxonMobil, Chevron, anything that has to do with commodities. And you can see again, US Steel up 78 cents, huge gain there. Take a look at Southern Copper, SCO, also at the highs of the day. Look at that major gap down today, and look at the move off the lows. So again, that's really, I think, what the driving force behind the rally is. I think it also helps that Goldman Sachs has turned to the positive side and reversed. You still have some drops on Texas Instruments and IBM, although they have come off the lows. But if you have to look again for what's the cause of the reversal today, it's commodities. Without a doubt, it's commodities with a little helping hand from Goldman Sachs, and that's where we sit. So let's go back to the spiders and take a look at the chart. The spiders gapping down below the key 106 level. What I want to show you on the 60-minute chart is more important. The gap down occurred below this key trend line. See this 106, 106.10 trend line right here, which was a major pivot point and major support area. But notice how it gapped below, and in the first 60-minute candle, it closed back above. What that tells us right away is that this rally could be underway because you gathered and regained this key support level and you never broke it on a closing basis. So the 106 level never closed on the 60-minute below that. That as soon as it closed back above, the rally was on. We rallied all the way back up, and really we're having our first red candle on the 60-minute today with a small pullback, and it's not even closing. This candle isn't even closing yet. It still has about 35 minutes left to go before it closes. Now notice where you went to. You rallied all the way up into the 200 moving average. You have right below the 50 moving average as well. We know that's major resistance at that point. Now you're seeing a little bit of a pullback on the markets coming back in after an extension gain. So again, just be aware, this was what was telling us today that this was a possibility. As soon as you close back above that key 106 pivot point, the market could continue the rally, and sure enough, it did. If we go to the intraday chart, you can see here, you gapped below and closed below this key level, but remember, the information tells us that we have to confirm based on the in-the-money stocks methodology. Did you confirm below the 106 level, which is this white line right here? The answer is no. Why? Because you closed below in this candle, and then by the next candle, you gapped or moved back higher above that 106, and it was off to the races the rest of the way. Beautiful upward trend right into this key little pivot. See this little pivot right here? Then you have a pullback in spirit of bull flag. That's telling you to watch the upside. Again, it was talked about in the chat room as a long possible play. Sure enough, it worked out beautifully. Look at the surge in this market to the upside. And again, we went right up underneath this 200 moving average to this key pivot. Where does this key pivot come from? Just go back a little ways and you can see. Let's go back. See this gap fill right here? This little pivot just below this little pivot and this little pivot high. That's telling you there's resistance right here plus the 200 moving average. Now, in the last hour and a half of the day, what do you expect? Well, I think choppy sideways action. You could see a little bit more of a push back towards that 200. But overall, you think the markets intraday are probably extended at this point. And as you are seeing a little bit of a pullback, I generally think choppy sideways action could be in store. You could make another move up and touch that 200, however. Keep an eye on this market, folks. It's a money-making market. What did I do today? What were my key plays? I'm only going to talk about swing trades right now. One of the key plays here, folks, today was the SDS. Now, I'd held this SDS, a large position from last week. I sold half my position on Friday for a $1.15 gain. Guess what? This morning on the gap down, when the futures were getting crushed pre-market and the markets were at their lows, I unloaded my last half of SDS at $35.55 pre-market. All right, that was all the way up here, above even levels, right up here. Sold it right at the highs, and thank goodness I did. And again, the technical's telling us to take that money and run, because look at the pullback on the SDS. So another huge win there. The second half making $1.25 per share on the SDS, and I'm now fully out of my shorts in this market at the highs of the SDS and the lows of the market pre-market this morning. That's what you have to do. For those of you in the research center, I sent that out. We posted on the hot charts and alerts. You got the text, you got the email alerts to take money as well, and that's the way we do it here. We sell at the highs and buy at the lows. Enjoy, folks. For those of you not involved in the research center or the chat room, I encourage you to come join. Again, $49.99 per month includes everything in that research center, all the money-making tools, and literally alone, just on that SDS position today, the second half that I sold, probably made about 100 times what the monthly subscription fee is on that SDS play. So, I mean, it's really a no-brainer in my opinion. Even if you're only buying 100 shares, you still made 2 or 3 times what the research center costs in 1 month. So, no-brainer, folks. Hopefully you'll join. We'll see you later. Take care.